Okay, okay. Let me see. Can I live stream now? I'm sitting in this area. I've been here for a while. So let me see if the internet is any better. If not, I'll try to do it again when I get home. But I made a lot of, well, not a lot, maybe two Facebook posts today. One in regards to authorized trade lines in 2022 this year. How really helpful are they to your credit report? And the other one in people getting rental reported on their credit report. Now, let's start with rental reporting first because I had some mortgage lenders that said they removed the debt to income ratio of renting reporting because it's not considered as debt, it's just considered as a recurring payment. Now, my point in making that statement about why would you pay for rental reporting to report to your credit report is based off of this. If you are a 21-year-old child, for example, that has no student loan debt, you have a clean credit slate. Let's say 18, right? Because you start getting a credit profile at the age of 18. You don't have anything reporting to your credit. Rental reporting may be to your advantage. But if you are a person who's looking to be a home buyer, right? Let's get this fact straight: that rental reporting does not report to any of FICO scores that helps you build credit to get approved for mortgage lending, right? That is FICO 2, 4, and 5. Rental reporting does not report to FICO 2, 4, and 5. And it can go backtrace to 2 years back, and it will be included in your debt to income ratio. Now, it is understood that when you're applying for a home, that payment is supposed to go away. But until that point, until you see a house that you want to qualify for, it's going to be debt to income ratio reported, right? So these are key factors that when building credit that you need to consider. Again, if you have a clean slate, if you're an 18-year-old, if you don't have any positive reporting, then rental reporting may be a good reporting method for you, but it will not help you in the area of building your credit scores to the credit lenders, to the FICO credit, right? To the FICO credit that's pulled to get you approved for a house, which is FICO's 2, 4, let me hold this, 2, 4, and 5, 2, 4, and 5. So this is why getting customized credit consultation is not just a one size fit all. And this is why I started posting about credit on my Facebook page, because I'm seeing now more than ever people are advertising 1995 credit repair, remove bankruptcy, remove collections, remove charge offs on Facebook, right? People, let me tell you this: you get what you pay for, right? These letters, after they have been circulated so much to Equifax, TransUnion, and Experian, eOscar automatically, even these free template letters that you're going to see on Google, that you can Google and send in for yourself, eOscar is going to automatically kick these letters out after they've been recycled and sent in so many times. So again, you get what you pay for. If I sold 1995 credit repair letters to 1,000 people, that makes me $20,000 richer. And so most people are not going to dispute. Okay, I spent 1995 on credit repair. It didn't work. Most people are not going to challenge a $20 investment, do it yourself credit repair. So the whole point of this 1990 repair special is to get the organization richer. Because if the organization have people that's selling 1995 credit repair and is not very effective, this can make an organization millions or even multiple thousands of dollars. And it's really no repercussions because they're going to make their money on a low cost investment that they know does not work. The second thing I want to address is now I'm moving is authorized trade lines. So give me a second. authorized trade lines in 2022, right? Usually authorized trade lines only going to get added to your credit score or your credit report for like maybe 30, 60 days, right? 30, 60 days. Psychologically, it looks good to see your credit score increase, but oftentimes authorized trade lines really help people who already have a solid foundational credit and they have low credit card limits, and they want to get approved for higher credit card limits, right? So if I found someone that has, for example, a $10,000 credit limit, my highest credit card limit is $5,000, but I have good credit and good standing. Now I can leverage their higher credit limits. And give me a second. How you doing? 1187. 1187. And so I can leverage their credit limit. But for people that have bad credit, to me, this is just like a band-aid. Right, you get an authorized trade line, you have bad credit, it's a band-aid. And with the new changes that recently happened last year with the resilience score, adding these authorized trade lines, many underwriters recognize that, hey, this you are AU. They're going to look at your primary credit accounts. Do you need these sauce? No, thank you. Thank you. So authorized users, they pretty much still gonna look at your primary trade lines. And again, in 2022, where now the government is raising basis point for credit, and credit is not as inexpensive as it used to be. It's not as cheap as it used to be. And now they're saying next month in September, they're going to raise it by another basis point, where the government is giving people at least a little interest for having money in the bank. So having money under your mattress or under your bed or in a box is not advantageous to you in the credit game. But the resilience score is going to look at your bank account, your cash transactions, and how much cash you keep on a revolving basis. And it's going to not only factor in your credit score, but your cash revolving scores as well. And again, authorized users, like if you want to pay hundreds of dollars, you're still going to go out right now and get a used automobile, maybe at 4, 5, 6% interest, right? But if you want to get, and credit card interest is higher. And so after 30, 60, or 90 days, and that trade line is dropped off your credit report, now what? Because you have no primary trade lines. I also tell people, don't go for the secure credit cards. You know that you have to pay $500 or $1,000 or something to get a credit limit, unless you're going for the secure credit cards that's going to graduate you to unsecured credit cards. Like Navy Federal have a good secure credit card program where they will graduate you to now unsecured credit cards. But other than that, getting these secure credit cards just puts you as a low profile, high risk credit applicant. Also, things that tie to your credit, you know, amount that you're approved for is your zip code, where you live. You know, how many addresses are reported on your credit report. So what's your strategy if you want your rent reporting? Are you looking for a home? Because if that's the case and you're looking for a house, a home, they don't report to FICO 2, 4, or 5. And that's where mortgage lenders pull from to approve you for a house mortgage. And yes, that is factored in. Like if you pay $1,500 for rent, that is factored in. That's a $1,500 payment if you're going to look for a vehicle or a car that you will not have. So, hey, I'm out. You know, I used to do credit repair. Call me the queen of credit, queen of crypto, queen of cash flow, whatever you want to call me. But text this number. Don't call this number. Text this number, 254-279-5515. Text Rich to the number on the screen if you want to get professional credit repair consultation and help and increase your cash flow, because oftentimes negative credit is just not, and my fingernail is in the screen, it's just not because you have negative accounts. It can be because you need to find some money to pay down high debt loans or high limit credit cards, or debt that is high, you know, and you need to pay down those debts more, specifically revolving debt with credit cards. So if you want to increase your credit scores and find the cash flow, because you may not have bad credit, you just might need extra cash flow. And this is from the money you're already making. This is increasing your cash flow, right? You can position yourself within 24 hours, the money you're already making, increase your credit scores. And then I tell people, after you do that, increase your assets. Put your money in a position where it is working harder for you than you work for the money. People, there's no really quick fix to bad credit. After a while, not having primary things reporting on your credit score and not having consultation to see what strategy and method is going to be the best for you. There's no one size fit all with credit. There's no abracadabra $20 credit repair template letters. The credit agencies already recognize this. They kick them out the system. For $20, people, you get what you pay for. Invest in credit experts and real credit repair. Listen, and I do not expect to get something for free. You have to pay for what you don't know. You either have to pay for what you don't know to get someone to do it and fix it the correct way, like you would if your vehicles had maintenance problems, or you pay for what you don't know due to lost cost opportunity and lost income opportunity. When you don't leverage your credit to get assets, you lose out on the opportunity to decrease your working years, number one, and increase your cash flow and increase your assets that you attain. And when you don't have assets, people, you have to work your ass off. I'm gonna say it like this, and I'm getting off this live stream because I can't hold my phone. I don't have a prompt. When you do not have assets, people, you work your ass off. Let your assets do the work for you. Hit like and hit share you all. And I'm talking loud because I don't have my earpiece, so I hope you all can hear me well. Have a great, great Friday. Queen out.